For 50 years, Warren Buffett has been master of this carnival, known as Berkshire Hathaway's annual meeting. And those that came to Omaha's convention center to see Buffett snacking on favorites from Berkshire companies or hanging out with a billionaire buddy were not disappointed. Annual meeting traditions were plentiful as the Oracle of Omaha celebrated his golden anniversary at Berkshire.
One more time! Go Big Red! Go Big Red!
In recent years, the meeting has also morphed into a shopper's paradise as shareholders can stock up on loot from dozens of Berkshire businesses. But it's the nuggets of investment advice from Buffett and his 91-year-old partner, Charlie Munger, that most shareholders really come for. Both men fielded questions in a 6-hour marathon that was closed to cameras. The topics range from, will the U.S. dollar be the world's reserve currency in 50 years? And is Buffett concerned about consumers' declining appetites for sugar? Yes to the first, no to the second. Much of the focus of the meeting was on the future, particularly, will the pair continue to make money?
We're going to try and buy more good businesses. We're going to try and improve the ones we have. And we've been doing that for 50 years, and we'll try and do it another 50 years.
We've been doing a pretty good job by just putting one foot in front of the other and reacting to the opportunities as they come along.
Berkshire shareholders have grown accustomed to plentiful returns. In the past half a century, the stock has gained nearly 22% a year. That compares to just 10% for the S&P 500. But in recent years, Buffett's Midas touch may have tarnished, as Berkshire has sometimes underperformed the market. That has money managers wondering whether Berkshire is getting too big.
Well, I think you got to think about the notion he doesn't want to get bigger. He wants to make more money. So if you reverse that and say, how do I make more money? Okay?
It has gotten increasingly more difficult for Buffett to make meaningful acquisitions. In March, Berkshire became Kraft's largest shareholder in a deal valued at $50 billion. But Buffett, who repeatedly talks about his itchy trigger finger, is still hungry for more.
It doesn't make any difference to me when I walk back to the office today if the phone rings from Germany or China or the United States. My mind is open on that. I hope they speak English, though. That helps.
Others say it's not size, but management that will be Berkshire's big challenge in the years ahead. Buffett has said his job will be divided among at least 3 people after he's gone. His son Howard will succeed as non-executive chairman, while the identity of the other 2 remains unknown. Whoever they are, they must respect Berkshire's culture.
It's trust, it's ethics, it's leadership, lead by example, and with thinking about the company as opposed to thinking about yourself. And he's built that culture up over 50 years.
When Buffett and Munger talk about the culture, all these great CEOs they have, all this talent, I think the culture survives and the company thrives without Buffett and Munger at the helm. I really do.
The arena is now full. We are now seating in our grand ballrooms upstairs to your left.
Still, many Berkshire shareholders, and there were a record 40,000 at this year's circus, were less worried about the future and more concerned about rubbing elbows with the Oracle of Omaha.
I wanted to just come in here warned. That was my whole thing.
It's quite an adventure and it's a lot of fun. And so when you can learn something and have fun at the same time, that's a win-win.
With the 84-year-old Buffett in excellent health, it looks like investors will have more opportunities to enjoy Berkshire's annual bonanza.
How's yours, Jack?
Susie Garrett for Fortune in Omaha.